Happy Sunday, guys. This week is going to be very, very important. Number one, this Tuesday we have congressional elections. Obviously, that's going to be very, very important. Number two, regardless of your political affiliations, I think at any point, honestly, this is just speculation. At any point, if Trump gets his Twitter account unbanned, the market will probably end up pumping. Because it'll just mean that he has a better chance of winning the election. That's my opinion. I'm not sure if that's going to end up happening, but just keep your eyes on that as well. Number three, we have CPI data coming out on Thursday. So this week is going to be very, very hectic. It's going to be very, very fun to trade. We basically have to tread the waters very lightly and not take anything aggressive swinging overnight, in my opinion. That would be the safest way to go ahead and maneuver this week. So before we go into the detail of the overall market and look at the charts and everything, I want to preface it by explaining that the only way that the Fed is going to allow the markets to start rallying is if basically they need to either lower the interest rate hike at the current pace. So they would stop doing the 75 basis point hikes. They would do it at a lower rate, or they would have to start doing QE. So keep in mind that the last meeting that the Fed had, Fed Powell said that he would continue looking towards having a soft landing, and he was very, very hawkish. So the other thing that'll most likely change this is if CPI data comes in better than expected. So that would end up causing the market to rally, and then the softer landing would be easier to happen, basically. So we're basically going to have to take a look at that. Anyway, number one, I want to take a look at crude oil. Crude oil is doing very, very well. So that's obviously going to help the SPY and the IWM related stocks, right? So with crude oil showing the strength, that strength can be translated into other sectors. Okay. Number two, the NASDAQ and the large tech stocks are very, very weak. They have a lot of upside potential. For example, Amazon, very, very overextended to the downside. This can help bring the NASDAQ up if Amazon starts bouncing. Similar to Microsoft can easily move up to 225 to 230 as well. Apple, you saw, had a big wick and ended up bouncing. So these large tech stocks basically have a lot more room to the upside. And if these stocks can start showing some strength, then that strength is going to continue to translate into the market. And another reason why the market basically bounced very, very heavily was that the dollar showed a lot of weakness. So the dollar showed so much weakness, right? And because of this weakness, we finally saw a move out of this garbage, gold. And the reason why I call it garbage is literally the only thing that I used to trade were the ETFs, volatility, and gold, silver, platinum, and a few other things. But gold is literally like the metals are literally one of the most manipulated things on the market. But yeah, so regardless, we saw a big bounce in the metals due to the weakness in the dollar, right? But one of the most interesting things is that this chart of the bonds basically did not show the exact same strength that the equities showed. So what we want to see is we want to see the bonds start showing a lot of strength, breaking above multiple levels of resistance, and clearly showing strength. We don't want to just see the bonds holding support. All right, we want to see the bonds starting to show some strength above levels of resistance, breaking below these downtrend levels, so that we can somewhat confirm some sort of strength in the equities market. But for now, the equities market is definitely bouncing due to basically a short squeeze led by tech. And yeah, essentially we just need to see if that can continue. We see a lot of strength also coming out of China and the European markets as well. So hopefully this can continue. Hopefully our BABA calls can continue into 75, 80. We see a lot of strength out of Europe. So we're basically going to have to see. This week is just going to be very, very hectic, and we basically just have to see if CPI data, and I would argue that if Republicans end up getting a sweep on Tuesday and they win the majority of seats, then that is probably also going to cause the market to bounce very heavily as well. Truly, aside from that, there's really not much else to really take into account. We can look at some more indicators and patterns and cycles and so many other things. But there's really everything is all up in the air at this point. Tuesday elections, and then Thursday CPI. Nothing else really matters at this point. So I hope you guys enjoy your Sunday. Make sure to rest, get some sleep. Make sure you guys have good food. And yeah, I will see you guys bright and early tomorrow morning. Take care. Have a good one.